What's going on here? Let's try to make sense of it because it's getting a little interesting out here, right? Because if we look at Bitcoin just on its own, we kind of see what looks like probably a bull flag, very likely, right? Where we see a very clearly established uptrend. We see price consolidating at the top of that uptrend, and it is consolidating above an important moving average. So the implication is that price should continue to the upside. But of course, markets can do whatever they want. And here's where it gets interesting. When we look at the other markets, S&P 500, that's kind of our other major index that we need to be examining, we see it continues to follow through on this uptrend, right? But we see it's coming up to that area where we should be expecting some kind of resistance. Now, when I think about what Bitcoin's doing in terms of its consolidation and sort of that bull flag formation, that makes me consider that price could very easily continue higher beyond the 702 here on the S&P 500. But let's look at the NASDAQ, right? So it's the same kind of deal. We see these clearly defined uptrends, but these uptrends are coming into that area that has a very high probability of resistance, right? So when we think, well, what Bitcoin's doing, it's like if Bitcoin is consolidating in a bull flag scenario, that's telling you that price on the NASDAQ and the S&P 500, the broader market in general, it almost has to go higher if Bitcoin is going to go higher, right? So that's the weird thing that we have to consider in our minds. And the fact is, we cannot know what's going to happen. All we can do is use probabilities to help us position ourselves for the most success, right? So we know the 702 has a high probability of a reversal, so we should be prepared for some kind of reversal coming to that point. But when we consider what's going on in the crypto market, it kind of looks like crypto, like let's just look at crypto really quickly. See if you see what I'm seeing here. Like it kind of looks like crypto is getting ready for a breakout to the upside. That's what this consolidation makes me think of, right? This is like a bull flag consolidation. It's consolidating under the 236 like it's about to break through it, and it's on top of the moving average here, the major important 200-week moving average here as support. It just seems unlikely that crypto is about to take a dip to the downside, right? Now, the markets are frothy in this situation. Specifically, the stock market is frothy in this situation, but crypto's not very frothy. So that's where it gets mysterious. It's like crypto, it totally, to me, if I'm just only looking at crypto, I'm not looking at the broader market at all, I'm like buying here. I'm like fully long here. I'm like, whoa, I need to be considering that the market can continue higher from here. That's what I see when I look at crypto. But if I look at, say, let's look at semiconductors because, they're finding some resistance up here, right? You broke through the 702. Kind of looks like semiconductors need to move back to the downside before they continue higher. That's what this weekly candle shows me. And it would make sense. Like either semiconductors are going to consolidate on top of the 786, maybe consolidate on top of the 702, on top of the 618, something like that. Either way, it kind of seems like semiconductors need a break. But as we've established, this is a very clear uptrend. So any kind of downside price action is a dip within that uptrend within a series of higher lows and higher highs. It would theoretically be a dip to buy. But the point is, we've talked about how semiconductors and crypto are related. If semiconductors are about to potentially come back down before continuing higher in the uptrend, we kind of have to expect the same thing to happen to crypto as well. And here's where you really got to consider what's going on here. Look at the VIX, kid. What's going on here? Now, either the VIX is about to break down completely out of this range, or it's about to move back to the upside because it's at the bottom of that range, right? Maybe it can consolidate around here. But the thing is, when the VIX is this low, pretty low. I mean, you go back 3 years in time, VIX is basically at the lowest it's been in 3 years. It hasn't broken the low of that range just yet, but it is at the lowest point it's been in a very, very long time. So I need to be very cautious down here because the VIX, it doesn't feel very comfortable at these low levels. It, to me, feels like it's got to have a pop back up, maybe come to retest these moving averages here, Doesn't mean that the market is going to collapse and the VIX is going to spike, although, as I've said many times, I am positioned for that. But it feels like the VIX isn't comfortable down here. And if the VIX needs to go back up, that means the market needs to go back down. So that's kind of how I'm thinking about it. But here's what I really want to make clear in this episode of White Knuckle. Being correct or incorrect does not affect my ability to make money. Okay, I'll repeat that. Being incorrect or correct does not affect my ability to make money in this market. I make money no matter what happens. That's the way you have to play the market, because I have positions that make money if the market is weak. I have positions that make money if the market is wrong. So when I do White Knuckle, I'm not like telling you how to speculate and then make trades based on speculation. I'm just spitballing potential schematics. And then I literally position myself to make money in all of the schematics that I'm spitballing, right? So that means that I always make money. I always win the way that I'm positioned in the market. So yes, my VIX position is getting killed down here, but that's fine because, I have semiconductor positions, and these continue to, basically blow up my portfolio. And I'm not ready to let those all go just yet, because at this point, when you're through the 702 here and you're in a clearly defined uptrend, it's like the market is innocent until proven guilty at this point. Like you have to assume that the buyers are in control. This is a clearly defined uptrend. It's now accelerating. So it's like you could make the argument, oh, it's exhausted, it's got to take a break. Or you can make the argument that this thing is accelerating, right? And the next stop on semiconductors is all-time highs, right? So once you break through those all-time highs, at that point, you're now in price discovery mode. The 1618 is the next logical target. And if that's what's going to happen here, then the whole broader market is going to rise. So I have to be positioned for that, and I am. I have been positioned for that, but also I'm equally positioned for the market to absolutely collapse and the VIX to spike. Because I'm using the leverage afforded by the options market, I don't need to win in every position. Even just one successful position is like putting me way in the black. I literally hit the jackpot if the market does anything, right? Like any type of volatility for me is extremely profitable. It doesn't matter which way the volatility goes. I'm positioned to make money in any kind of volatility because of the way that I'm using the options market. So if you want to learn about the options market and you want to learn how to literally make money no matter what the market does, comment that, let me know that, because I'm willing to teach people how to get sickly rich using options if they're curious. It's not really content I'm willing to give away for free. I give a lot of content away for free. Over the years, I've done that. But the true value in my knowledge of the markets is really the way that I can make money no matter what happens. And that's possible because of using the options market. So if you want to learn about that, you make a comment, contact me or something, because that's what I'm willing to teach, and actually charge money, like a private lesson. Like I'll give you a private lesson on using the options market, right? Kind of thing. So just something to consider. But it's the point that I'm trying to make is that I don't care which way the market goes, right? I have a long-term schematic, so I do have a long-term bias that the market is going to rise, which makes sense historically, right? Like long-term, you don't want to bet against the market, right? Long freaking term, right? So that's kind of where crypto comes in. Crypto is that leveraged long-term play, right? I'm not betting against crypto long-term. I'm accumulating when it makes sense to accumulate crypto. But obviously, if I'm holding, a large part of my net worth in cryptocurrency, then my ultimate long-term bias is bullish. So I'm going to make the most amount of money if the market stays bullish. But in the short term meaning like 1 month, 2 months, 3 months, I'm positioned to make money no matter what. And so ideally, the market will dump from here and we will have a major dump. For me personally, ideally, the situation would be the market dumps, the VIX spikes, I make a slaughtering on the VIX spiking, and then all the money that I make on the VIX spiking gets to go into my crypto positions, right? That's the ideal situation. And that's maybe sort of influencing my speculations because I'm sort of projecting my biases in that, but that's why I'm telling you what my biases are so you know what I am projecting. My dream situation is that I get a chance to buy. Let's just talk about those target levels one more time in case you forgot. Like I would love to be buying crypto around the inverse 702 of this structure, this local structure here, right? So this would be the ideal dream scenario for me to be accumulating cryptocurrency right here, this inverse 702, right? So if crypto is going to dump like that, semiconductors are going to dump, the broader market is going to dump, the VIX would be spiking. I would be making like a sick, disgusting amount of money on VIX call options, and all that money would go into crypto here because this would not be invalidating the uptrend. This would still be a higher low in a series of higher highs and higher lows. And if we corroborate it with the S&P 500, we can see that the S&P 500 is now in a position where it's got a long way to fall before it invalidates this uptrend, right? And I don't think this thing is going to be stopping next week. I think the next stop for the S&P is probably around the 702, right? So you get a pullback at the 702. Do you think you're going to fall from 440 all the way below 383 on the SPY within, a relatively short period of time? Unlikely, right? Unlikely. Like the buyers will step up before you get down here, right? Because I'm not the only person who plays the market this way, right? Think about all the people who are holding VIX call options thinking the exact same thing that I'm thinking. They see the market is in an uptrend, a series of higher highs and higher lows. They're positioned for a major knockback. And with the money that they make on that knockback, they're going to be buying the dip, right? So it's unlikely that this market is going to invalidate the uptrend, right? Like you have to realize that what I'm doing is I'm just thinking like all the other successful people in this market. And the successful people are the people who are playing both sides of the market and using the money they make on one side of the market to bolster their position on the other side of the market, right? So that's why when you're in an uptrend, that uptrend becomes a self-fulfilling prophecy because people are making money on every single pullback, right? They're trading all of these pullbacks, and the money that's made on those pullbacks is reinforcing the uptrend. So that's why I'm saying, like, do you think it's possible that the S&P can drop from, let's call it 430, down to 380? No, that's highly unlikely because of the amount of money that people would make on that fall. Those people making money on the fall would become the buyers that would reinforce that uptrend. So that's the way I'm seeing it, but I'm also seeing that play out in real time. We talked about this. We talked about the back test of this almighty trend line. I talked about that is the greatest buying opportunity of 2023. It literally was, in fact, the greatest buying opportunity of 2023 so far. I don't think that's about to be invalidated. So that's all just part of this idea that we're in a clearly defined uptrend. The buyers are in control. But realize the buyers continue to make money when the market pulls back, right? Because when the market pulls back, we can make money on VIX calls. We can make money just shorting the market. People are holding. This is not my personal strategy, but one strategy is that you're actually accumulating put options or you're accumulating short positions up here as a hedge in the event that the market does dump. So the point is, if the market dumps, people are making money. There's no two ways about it, right? So it's unlikely that this uptrend is going to be invalidated because of the money that's made on the pullbacks, right? It's probably repeating myself at this point, but if you are using options properly, you're able to make money no matter what. If you're able to make money no matter what, you're starting to realize that other individuals are doing the exact same thing. So when the market establishes a clearly defined uptrend, it's literally the trend is your friend. Right? And now you can see why the trend is your friend. It's because the buyers are in control. They have established dominance over the sellers, but at the same time, those buyers are making money on any pullback, or at least they're positioned to make money on any pullback. We haven't gotten any significant pullback literally since March 20th. Like, holy crap. Like, this has been quite the up move, right? So if you were getting long down here, well, Jesus, you're killing it right now. You're killing it up here. But you are coming into, 618, 702, golden pocket. You got to be prepared for some kind of resistance to show up in here. And that's why I keep coming back to the VIX. I'm like, this is free money down here, right? Even if the market has like 1 week of pullback, like think about 1 week of pullback here would make a whole lot of sense. You realize the VIX, it can literally go, it's like, $15 the moving average is at $22. If you have call options on a move like that's like a 5x right there, right? So it's like you got to realize that there's definitely a lot of money to be made on the VIX based on where it is within this range that is literally, at this point over 3 years old. You're getting to the point where the VIX is going to have some kind of bounce. That seems to align with the S&P at obvious areas of resistance, 618, 702, golden pocket. So, yeah, that's where I'm thinking. And I'll just finish by telling you what I'm thinking about Bitcoin. Really, it's like Bitcoin looks like it's consolidating in a bull flag. It looks like the next obvious move is to the upside, right? So that kind of gives me some inclination that the markets can continue to rise a whole lot more than from where they are, meaning the S&P potentially would rip through the golden pocket, just like the semiconductors did, right? The semiconductors just rip through the 702. They're on their way to new all-time highs. That could happen to the S&P 500 as well. And that seems like a very plausible scenario considering what Bitcoin's doing right here. It's just consolidating in a bull flag within a clearly defined uptrend on top of moving average, right? So trend is your friend, also moving average as support. It's like you got to be pretty bullish at this point. And even if the market is pulling back, you still have to see that as a buying opportunity. That's a pullback within an uptrend. So that's what I got for you. So if you want to learn more about options, comment. I'll respond a way to get in touch with me, and we can help you make a killing amount of money no matter what the market does. And then that would empower you to be very wealthy. So, good. Trust the